Well, hello, folks out there in YouTube land. Got a big show lined up for you. Got 5 stocks that I'm buying during this brutal, scary market. It's rough out there. All right, let's pull that screen back up. Oh yes, it's terrible out there, rough as can be. We're going to be covering Meta, used to be Facebook, Ilus, Palantir, Neo, and MP Materials. These are 5 stocks that I've been buying during this bear market. And it's terrible out there. We've got the horrible inflation. We just had the interest rate skyrocket, 3/4 of a point. I've never seen that in the last, 20 years, it seems like. So we got a lot of that going on. And if you want to see something scary, here's the Michigan Consumer Sentiment Index. And again, I covered this the other day, 50.2. It's the lowest it's ever been in history. It's an absolute nightmare. People have no confidence right now in the country, and they're having to spend all their money on gas and food. So it makes it really hard to go out and buy a lot of products with that going on. And I don't see anything getting done about it. Like I said, we have Chairman Powell. He's trying to act like everything's fine. You know, he was over there talking up the economy. It's like, really?
Please disperse. Nothing to see here, please.
Yeah, it's not good. It's no bueno. So that's got the entire market scared to death. It actually had a couple of run-ups the last couple of days, so I didn't touch anything. As I've told you many times, I don't buy on green days, and right now I'm only buying on the biggest red days, and we had exactly that today. We had a big one, and a lot of really good stocks got knocked into oblivion. So I picked up, I was buying all morning. And let's start out with the first one, which is Facebook, Meta. And I've been buying this one. I told you I liked it under 180, and it dropped. Look what it did today. Good grief. It dropped a bunch. Let's look at a 1 day. Yeah, it dropped 5%, dropped $8 today, down to 160. And the PE ratio is 12, okay? Freaking 12. Like, this is like some mature company that can't grow and will never grow again. And it's sitting at a great value. Look at the financials on this freaking thing. All right, this was the first quarter, which wasn't great. $27 billion, $7.5 billion in net income. You heard that right, 7.5. They made $10 billion in December, September $9 billion, and then $10 billion. So they're pretty comfortable making $10 billion. We had a rough first quarter, and they only made 7.5. And that's what them spending like crazy on the metaverse. They're investing heavily in the metaverse. I think they spent like $10 billion on it last year. I mean, they have spent a fortune on the metaverse because they believe it's going to be huge. And I think it's going to be huge too. That's not the only reason that I bought Meta. I bought it because it's a great company with a ton of money. Their balance sheet's ridiculous, and it's just so profitable. So I'm very comfortable with a 12 PE. I couldn't be more comfortable. Now we've got Palantir. It pulled down under $8 again. It was down 11% today. It ran up. The other day I was buying it in the 7s under 8, and it ran up to 8.25. It's pulled back down below 8, under 8. I really like this company. I think it's a deal. This is a company that I think is going to really work out well long term. It's got a 30% growth rate, 30%, and they're expecting that through 2025. It is positive cash flow. The one issue they've got is stock-based compensation. I have a couple of companies that have that problem, and that's where the top dogs take too much. And, I don't know how many mansions they got to have, but it's a problem with a lot of companies where they do the stock-based compensation. And if you think it's being spread out equally, no. It goes to the top dogs. You might as well know that. And that's one issue they are resolving. It's getting better, and they have spoken to it, instead of ignoring it the way a lot of companies will. They've actually spoken to it and said, hey, we realize that's got to be solved, and this needs to be a GAAP profitable company, not a cash flow positive company, which it is. It's set up to succeed during the tough times, and it is a information specialist company that's a software as a service, huge profit margins, and they help companies and governments deal with all the information they have, and they bring value by showing companies how to take that information and be more efficient, more profitable, and they help countries deal with all the information and use it in a proper way. So I love this company. It's got a moat. It's got an information moat, and they've been doing this for years and years. So I'm very comfortable with it. I think it's going to be a $30 or $40 stock in a couple of years, but that's me. I'm real comfortable below $8. And if it drops any lower than that, I'll just buy more. But I did buy this morning. Now we've got MP Materials. This is my third one. I bought that this morning. It dropped. I said anything under 35. I think last time I covered it was 37. And I said if it gets below 35, I'm going to start buying some. I own quite a bit of it. But the PE ratio is 30 on it, which is a little bit high, but the growth is ridiculous. And realize this is a mining company, which sounds boring, but I see it as an EV play because if there's one thing our country needs, it's batteries. And to make a battery, you've got to have the rare earth elements, and they have to be processed. Well, what does MP do? They're the only mine in North America that actually produces these minerals, and they have a huge moat because trying to build a mine in this country is unbelievably expensive, and they bought this mine out of bankruptcy, and their balance sheet's awesome. And they're making great money because those rare earth elements are extremely valuable, and they're going up all the time as there's huge demand for batteries, lithium, et cetera. So when you look at these financials, they're growing. It's stupid growth. 177% revenue growth year over year to 166 million. Their net income is 50% almost. 85, actually it's more, $85 million in net income out of 166 million in revenue. They're working on a phase 2 and a phase 3 where they can actually deal with those minerals themselves and process them, and they'll make money there. And it's a little profit beast and a growth beast. So I'm real happy with MP Materials under 35 bucks. I'm comfortable with that, even with a PE ratio of 30, because if you look at the forward PE on this thing, it's going to be a value stock probably within the next 6 to 12 months. All right, now you've got NIO, which is an EV car company in China. And I've been following this one a lot, and it dropped all the way down to 16 bucks the other day. And today it did drop about 4.5%. It does not surprise me. If you look at the last 5 days, it had a big run up from 16 all the way up to right at 20 bucks. So, that's what, 25% run up. So I'm not surprised by a pullback, especially with the market crashing like it did today. But I said under 18 bucks, I like this company, and I've been adding, and I bought a bunch at 16. And like I say, I'm just dollar cost averaging this. Now, there are a couple of issues with this company. As you know, the delisting risk with any Chinese companies out there. And even though the Chinese government's saying all the right things, the SEC's position is, hey, until you actually show us that you're going to let us audit these companies, you've got a problem. And now, it takes a long time to delist a company, almost 3 years. But, this is something hopefully they'll resolve over the next few months. The other issue is the lockdowns, which are unbelievably stupid. They're pointless, but they're doing them anyway. And it won't work, but like I say, they got some pride involved in the leadership over there, I believe. But, we went through this latest version of the Rona, and it busted through this country in about 2 months, and now we've moved on with our lives. It's something we're just going to have to live with. And that's what China needs to come to the conclusion of. They're back in their first phase deal. So hopefully they'll wise up on that. But I like NIO long term. Fundamentally, they're strong as can be. They've got 3 analysts that are putting the price target of 31, the second one's in the mid 40s, and one's got them at 87 within 12 months. So granted, everything would have to work out perfect to get to that 87. I think that would, if everything works perfect. But, the other ones at the 31 and the 45, I feel pretty comfortable with all these nice price targets, and I like NIO long term fundamentally. And they did also just launch the ES7 and the ET5s coming out in September with their second factory. And they're getting ready to launch in Europe. So, there's so much going on with NIO. It's unreal. And the last stock is Ilus International. And Ilus has been getting crushed just like every penny stock just about out there. Penny stocks are super risky.
Danger, Will Robinson. Danger. No, Will Robinson. Danger.
Risky. Know that going into it. I practice a 10% rule. I only put 10% of my money in my portfolio into OTC stocks. I do like some risk, but I don't like to go crazy with it. Ilus is a profitable company, and they do have nice revenue. It's been growing quickly. This one only went down because 4 of the companies they have under their umbrella, and they are mergers and acquisitions company in the fire and safety sector. 4 of their companies that they own about 8, were put into ERT, which is another company which is under their umbrella, and they've got to do some consolidated accounting to account for that, and they are getting uplisted. They're working on getting uplisted, OTCQB. So there's a lot going on with this company, but the revenues are growing, and they just announced they're working on a $20 million revenue company that they look to acquire, as well as a $100 million company, revenue-wise. And this is one of those rare beasts that's got positive income. They're making money, Ilus. Each quarter they've made money, and this one, like I said, it was lower because they don't have those 4 companies in the accounting there, but it's at 20% margin, which is great. Fire and safety sector is a very profitable sector because companies have to, you can't do anything without fire and safety, or you'll just get shut down by the fire inspector. And having run a couple of buildings myself, that's money you don't even, you pay it. It's just something you pay. It's like paying the electric bill. You're going to do it. And so those companies that are in there are very profitable. So I feel good about Ilus long term, even though it is going through this turmoil. All right, folks, and that's the 5 stocks that I'm covering today, and I am buying those, and I bought them again today. I did in the last couple of days because we had a nice little run up, but, you know, whenever there's a huge red day or a couple in a row, that's when I like to get out and start buying the companies that I feel best about, that I've done the most, you know, due diligence, and do that yourself. Take a look at some of these if they interest you. You know, it's your money. You do as you please, but these are ones that I'm acquiring, and I'm dollar cost averaging everything because that's what I do. And if you like this content and you like this style of video, let me know. Just hit the like button. Lets me know that you are interested in this style. And if you haven't subscribed, hit that subscribe button. I'd certainly appreciate it. Helps the channel and makes it easier for me to do these things. And I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.